Good morning, distinguished guests, ladies and gentlemen. I would like to thank RAM Holdings for their invitation to deliver today's keynote address. I wish I could have had the opportunity to speak face-to-face with you in Johor. But I hope today's keynote gives an idea about the government's approach to the economy. The convergence of technology and finance are fundamental drivers to growth, and countries like Malaysia are forced to carve out our place in a world with increasing uncertainty. Despite these tailwinds, Malaysia's robust financial system has anchored our economy. As of September 2024, our fixed income markets sees our total outstanding bonds valued at about 2.1 trillion ringgit, one of the largest across Southeast Asia. The stable and liquid capital pool has been critical for investors to debt finance their projects. We have established a deep capital market structure that is reflective of the economy's resilience. The challenge for Malaysia is advancing the sophistication of our financial actors. How do the sell side and buy side players ensure their financing is directed towards the best ideas? The mobilization of private capital towards ventures that grow the economy. However, there has to be a product offering for money to be channeled towards, and that, perhaps against convention, is what the Ministry of Economy has worked on. We have spent most of the last 2 years curating product offerings like NETR and KL20 to focus investments. The concurrent forces of technology, energy, and geopolitics have been at the forefront of our priority setting. These forces, balanced with a commitment to fiscal prudence, is what will ensure Malaysia's long-term growth. The first force is technology. We've actually revamped our entire approach to tech. Previously, the idea of creating 5 unicorns by 2025 was short-sighted. Government could have directed its capital towards 5 startups, but that doesn't help the hundreds of others. By stopping this obsession on outcomes, we focus on ecosystem-wide issues. Our launch of the KL20 Action Plan earlier this year addressed these pain points. The setting up of the 3 billion ASEAN Investment Initiative ensures there's adequate funding in the early stage. Policies like the Innovation and Unicorn Golden Pass pool digital talents into making KL their base. We also doubled down on our comparative advantages. Our sizable presence in semiconductors and supportive policies was able to attract global leaders like ARM and Phison. In April, we announced our intention to launch the largest IC design park in Southeast Asia. 5 months later, we have successfully launched in Puchong and have already onboarded 7 firms from China, India, and the United States. The second force is energy. The National Energy Transition Roadmap became the government's first cornerstone policy document. It is indicative of our ambition to be a renewable energy hub, one that has a resilient supply powered by a varied energy mix such as natural gas and solar. To achieve our goal of 70% renewable energy mix by 2050, we've rolled out the Corporate Renewable Energy Supply Scheme, also known as CRESS. Not only does CRESS facilitate green adoption amongst large corporations, it enables third-party access to our electricity supply. This is a decisive shift away from the single buyer model towards a more open electricity market. We have also taken considerable steps in the road to net zero. Malaysia's several high-quality storage sites makes it a leading candidate for carbon storage. Next month, we will establish a robust regulatory framework by tabling the first ever CCUS bill. This will reassure investors and position the country as a decarbonization hub across Asia Pacific. Energy's wide domain means there are substantial financing requirements. For Malaysia, we will need about 1.3 trillion ringgit by 2050 to fulfill our aspirations. With several catalytic projects already underway, energy transition is not just an attractive investment proposition. It is a means to redefine Malaysia's global position in the energy sector, which leads to the third force, geopolitics. The positioning alongside the Straits of Malacca has made Malaysia a strategic hub for trade and commerce. It helps compensate for our relatively small market size, shadowed by the giants of China and India. But it's also meant we've been a natural bridge between the East and the West. With rising tensions and the world turning inwards, our philosophy of greater economic integration seems contrarian. If you look at the upcoming Johor-Singapore Special Economic Zone, it's easy to think this was a given. It actually takes real courage for neighboring countries to recognize that they are better off being closer together. In JSSEZ, we are going to boost the movement of goods, capital, and people. Through measures like passport-free travel and the harmonization of business regulations, there will be a tangible improvement to people and corporations alike. Given our constraints are complementary, the net effect of closer cooperation translates to substantive value. JSSEZ also offers a potential working model for ASEAN. As Malaysia readies for chairmanship next year, the principles of neutrality and pragmatism will be critical. They are the basis for a rules-based order that promotes economic connectivity and security. Ladies and gentlemen, as we turn to tomorrow, many of you will be anticipating the tabling of Budget 2025 by the Prime Minister. Whilst I can't delve into the details, what you can expect is a commitment to fiscal discipline. Controlling the deficit ensures government expenditure is allocated efficiently and the country's finances are on a sustainable footing. It echoes much of what I've touched on today, the need for stability. Many credit rating agencies, from Moody's to Fitch, view Malaysia with a stable outlook. When the forces of tech, energy, and geopolitics interplay, the common thread of stability will determine our successes. It has and always will be the necessary condition for Malaysia's progress. Thank you for your time, and I wish you a productive forum ahead.
Right, once again, thank you, YB Rafizi, for your address and setting the tone of the discussion to follow today. Right, ladies and gentlemen, we'll start our first session entitled Economy Megatrend Shaping Global Growth. And for this, ladies and gentlemen, our first panel will delve into the megatrend shaping global and regional economic growth. According to the Digital Minister Gobind Singh Deo, our government targets 25.5% of GDP contribution from the digital economy by end 2025. Malaysia is positioning itself to tap into this growth, particularly through the advancement in technology. Ladies and gentlemen, moderating this discussion is Mr. Lee Heng Gee, Executive Director of Socio-Economic Research Center, a think tank of Association of Chinese Chamber of Commerce and Industry Malaysia. He is a prominent economist in Malaysia, having spent 40 years in his career in various senior advisory and policy roles. Let's welcome Mr. Lee. And of course, ladies and gentlemen, our panelists comprises of Mr. Anuj Vasti. Overseas Guarantee Operation has the current Vice President of Operations at the Credit Guarantee and Investment Facilities, CGIF, a trust fund of the Asian Development Bank. Prior to that, he held senior role in Society Generale, Nomura, Merrill Lynch, and HSBC. Welcome, sir. Our next panelist, ladies and gentlemen, is Mr. Manu Bhaskaran, CEO of Sentinel Asia Advisors, and is another eminent columnist with more than 40 years experience. And Mr. Bhaskaran, I hope you're well today. Right. And of course, we also like to welcome Mr. Alan Tan, is the Chief Economist at Affin Bank Berhad, and is a well sought after speaker at Malaysia's forum and conferences. Well, Mr. Lee, you have the floor.
Thank you. Hello, can you hear me? A very good morning to everyone. Selamat pagi, tuan-tuan dan puan-puan sekalian. For those who know Mandarin, 大家早上好. My name is Lee Heng Jui. I'm the SCRC Executive Director. I'm happy to be here under the sponsorship, the RAM Holdings to be here. I think next year is a big event for the whole country as Malaysia will be hosting the chair of the ASEAN. And given that this year is a very good year for Malaysia, we are on the right track. And global side is still quite bearable, yeah, up and down. Risks are there. I mean, we are waiting for the US president election result. And there are still war in Middle East tension. And hopefully things will be much calmer next year. Now, today, first of all, it's a great honor for me to be the moderator. I have two friends here, long-time friends, Manu and Alan, and also a new friend, Anuj. I think important today, I hope that this panel discussion with so many esteemed panelists will make it very productive and be frank on the exchange of issues. What are the major trend and the mega trend and risks to watch for next year or even beyond next year? And how would that impact on Malaysia? I think from a regional perspective, we are financial specialists here, where we will be looking into what are the regional risks, from the perspective of the capital market side and from the financial institution. I think there is a lot of funding needed, not just to finance the ASEAN market, but also in particular Malaysia, as what you heard from the YB Rafizi. There's a lot of plans in Malaysia, which we need a lot of funding. Yeah. So I think just to give you a backdrop, and I like to touch a bit before we pose questions to our panelists. Looking at Malaysia, I think Malaysia for the last 2 years, in particular this year, we have rolled out a lot of strategic plans and roadmaps. The intention is to make Malaysia a very appealing investment destination. I think I would say both the pull and the pull factors and also the push factors have made Malaysia a sweet spot, given Malaysia's strategic location, not just in Johor, but also in different states like in Sarawak, in Penang. And that strategic location, and the good thing about Malaysia, we are friendly to everyone. The foreign policy neutral has appealed to all investors to come in, whether it's under China +1, Taiwan +1. And more than that, Malaysia in terms of the landscape, in terms of business environment, we are ready. We are ready to welcome not just the FDI, but also the domestic direct investment to participate in this transformation agenda. And we hope that, to me, this is for Malaysia's second chance. The second chance, with all the strategic plans in place, we have to make it a success. May not be 100%, but at least 70%. So we start from Johor, Singapore, SEZ, whatever you call the special financial zone under the 4 city. And most important, how do we make it more compelling? Given the backdrop of all this mega trend, which come with risk come with opportunity. I'd like to share with you some of the mega trends before we move on to discuss about what are the things. Now you look at here. Now what are the mega trend, and how would this mega trend shape and influence all of us? Whether you are the government leaders, policymaker, corporates, business, and individual. So you can see like urbanization, globalization, whether you're shoring, onshoring, and also talking about robot, AI, technology, aging. Aging is something that we have to take note. Is Malaysia ready? Are we ready? I believe Singapore is more ready than us. So by year 2030, 2050, we have 15% of population of the age. So I always look for budget. Every year, can you come up something to help us to be ready? There are business opportunity for aging society. Now, the next one, you can group the mega trend cluster. There are 4 clusters. What today, Tim rightly fit the first cluster. Rapid technological development, in terms of all the hyperconnectivity, working change. I think during COVID, everybody talking about after COVID, work from home. But now we are back to normal. So this is something that we are changing the way the mindset of working, demographic shift, urbanization, migration, health challenges. In Malaysia, health challenges is a big one, big issue. Aging society, you need more budget, funding, healthcare. That will impact on your productivity, And the third one, environmental pressure is getting more intensified, my dear. It's getting more intensified. People are just busy fighting war, but never think about how climate change will impact the resources scarcity. These are food, water, growing consumerism, sustainability, changing food system, even a data center. Malaysia has a lot to offer. Land, cheap. Water, cheap. Electricity, subsidized. So have you think about what's the optimality of investing in data center? Maybe we have to start to think about nuclear power. Renewable energy may not be enough. And there are big players now start to own an initiative to have nuclear power. The last one is, I think the panelists will discuss shifting power, multipolarity. People are fighting with each other, economic inequality, conflict, crumbling, and social cohesion. So with this, I hope the panel will discuss about all this mega trend and how would that impact on Malaysia and how would that, from the regional financial specialists, how they look into impact on the regional side and also the specific country. Now, let me start with our good friend, Manu. Manu is a leading Asian economist. He said number 1, no one can say number 2. Okay, he's a regular columnist in Age. For those who read the weekly, he's my good friend, very long. We know each other very long. So I think, Manu, maybe it's good for you to give us a backdrop. What are the top 3 major trends and risks to watch in 2025? Thank you.
Thank you, Heng Jui, for that kind introduction, and thank you, Ram, for inviting me here today. I think Heng Jui has set the scene very well with the big 4 clusters of megatrends. So how can I add to that? I think if you look at the very near term of the next year, then I think it's a couple of the outcomes of these forces that will operate. One is obviously supply chain reconfiguration, which is accelerating because the foreign direct investment that resulted in terms of commitments will now actually unfold in terms of factories being set up and so on. Secondly, there continue to be political threats. And the thing that we need to watch out for next year, obviously, given a possible outcome of the November 5th election in the US, is the threat to trade, which is the vital lifeblood of countries like Malaysia in this region. And there is a significant threat to trade if Mr. Trump's agenda of swinging tariff increases, not just on China, but on everyone, is implemented. I mean, that would really throw the global economy off kilter. And finally, there are financial stresses that have been sort of under the surface, but I think continue to operate. Now, looking beyond that, I think there are 2 things that we need to think about, maybe over the longer term. One is the end of American exceptionalism. As you know, America somehow has done extremely well. Equity valuations are high. The economy has completely confounded expectations of a recession. Its resilience has been extraordinary. It has gone from being an energy importer to being an energy exporter and so on. But I think that period of extraordinarily good luck with the dollar and all that is coming to an end. And some of its long-standing problems with public debt, the deficits and all that, I think will become more in focus next year as the new administration takes over. The second thing that we need to think about is China. There are now some arguments that China has reached a peak and will never be able to catch up with the US. I'm not sure I agree with that, but certainly China is facing considerable constraints, and how it deals with those constraints will have a big impact on us next year. In the near term, I think the government is doing just enough to keep growth going, but there are big structural factors impeding, and some of China's trade policies, I think, will result in greater protectionism, not just from the US, but from many, many other countries. So let me just hold that.
You're talking about between the coming election for US, between Harris and Trump, which I always say between the Beauty and the Beast. So what's your prediction? Who will be the one? Who will come emerge as a winner? And how would that impact on Asia in terms of, you talk about trade tariff. We know that Trump is going to have 60% against China, but the non-China country is about 10 to 20%, which Malaysia will be impacted as well. So I think how would that impact in terms
I was afraid you're going to ask me who was the beauty and who was the beast. So I won't say that. But it's a very stark difference in scenarios. Not that Biden-Harris have been free traders, but there's a certain commitment to multilateralism and openness and so on. But if there's one thing that Mr. Trump really passionately believes in, it is tariffs. And this time round, unlike before, when he was not prepared for his presidency, he's going to go in from day one prepared to do what he wants to do. So when he says 60% tariff on China, okay, it may not be 60%, it'll be very high. And when he says 10% tariff on all imports, it's going to happen because he wants to raise tariff revenue to offset the losses from tax cuts. So this is going to be very, very destabilizing. Whereas with Harris, it is probably going to be a continuation of current trends. So yeah, it's not great. You have industrial policy, you have some tariffs, you have lots of restrictions on technology transfer and so on, but it is really far short of what Mr. Trump will do. So the threat to us in this part of the world, we are export oriented. For us, the flows of trade in goods, in services, in capital, these are vital to our future. And honestly, I think the markets are underestimating the threat.
Okay. This is something that we have to watch out. But in terms of, let's say there's a tariff protection that could put inflation coming risk, and that will also hurdle for the Fed to cut interest rate. So you think that could be one of the possibility?
I personally think the markets have overpriced.
I agree.
The number of
I think the market's overpriced.
As it is. Yeah. And worse to come if these tariffs go through, I think. Yeah.
Okay, thank you, Manu. Then we back to Alan, expert on Malaysia, and with what Manu had painted in terms of the major trend or risk, and in particular US and China, China is our largest trading partner, and US is number 3, number 4, if I get it correctly. What's your outlook for Malaysia? We don't talk about this year, almost done deal, right? I think definitely we can grow about 5% with the first half 5.1. Budget is another 2 days, Friday, and tomorrow, sorry. So how you see the outlook for Malaysia?
Thank you. Tan Sri, Dato, ladies and gentlemen. First of all, I would like to thank Rating Agency Malaysia for inviting me as a panelist, and it's a privilege to have Heng Jui as the moderator, and also sharing the session with the two distinguished panelists. So to answer your question, I think when we look at the macro outlook for Malaysia, our expectation is that Malaysia's economy, after growing at 3.6% in 2023, likely that we'll see stronger GDP growth in 2024, around the region of 5%. And the expectation is that going into 2025, there will be a step up in the GDP growth to 5.2%. Let me explain why the optimistic forecast for Malaysia. As we all know, Malaysia is a very open economy, reliant on trade, and therefore any downside risk to global growth, for instance, China, US, would have some implications on Malaysia from a exports perspective. So therefore, when we look at the domestic demand of the country, we see private consumption holding up relatively well. And we are also seeing a revival in private investment. I think this is important, partly because if we were to look at the growth, Malaysia's GDP growth on an aggregate demand basis, we are seeing strong exports in certain years. But however, private investment has been slowing. But over the last 1 year or so, a lot of the approvals, investment approvals, has been realized. And it's about 77% of the approvals, investment approvals from the manufacturing sector has been realized. And this has created the economic multiplier to private investment as the other engine of the Malaysian economy. So here we have net export being positive, private consumption holding up, private investment picking up, and that's a fourth element to growth from development expenditure, driving public investment. Tomorrow, in the budget announcement, the expectation would be for government to maintain the allocation for development expenditure. And we all know, right, development expenditure has good multiplier effect because these are the money spent by the government to build roads, highways, hospitals, police stations, and a lot of the infrastructure related type of construction projects will likely pick up. And therefore, we are expecting 2025 to be a year where we are seeing a more broad-based type of economic expansion, not just exports, private consumption, but we are also seeing private investment, public investment picking up. And that, I think, would bring about a more broad-based economy and more sustainable. And if I may just add, the other reason why we are optimistic on our growth forecast for this year, next year, has to do with the International Monetary Fund's projection, where they are expecting global GDP to be in the region of 3.2% this year and pick up to 3.3% next year. So this is another, comforting note from a macroeconomic outlook perspective. Thank you.
Thank you, Anand. I concur with your assessment. In fact, our center is still positive for next year. We are looking at 5%. But I think the most challenging question that I always get from the business people when they talk to me, Malaysia headline GDP look good, 5.1%, 5.9% in second quarter, first half 5.1%. They ask, what are the trickle-down effects on us? Cost of living still high, business cost still high. My members are all SME. They say, I don't think the number really show what's on the ground. How would you explain on this? The trickle-down effect. I mean, they're even talking about data center. These are big player games, not the SME. What are the things that we can benefit from data center?
Okay, I'll try to answer these questions. We know that there will be some spillover from sustainability of economic growth. Right now, what we are seeing is, like I mentioned earlier, it is not broad-based. The economic expansion that we are seeing in 2023 up to the first half of 2024 has not been broad-based, meaning to say that it has not really picked up because of the strong GDP growth or strong sector growth. But however, we believe that going into the second half this year and similarly next year, we will see the multiplier from the economic expansion triggering down into the household in terms of income, wages. But the other thing that I wanted to note here is you mentioned about cost of living. There are certain government policy that has to be adopted because we talk about fiscal consolidation, fiscal discipline. So government has the tendency to come out with certain measures that, for instance, the removal of the diesel subsidy that may have somehow push the cost of living higher. And just now Mano rightly pointed out the supply disruption due to geopolitical tension that we face in 2023. That has also resulted in rising commodity prices, and that triggers down into prices as well. So all in all, what I'm trying to illustrate to you here, Heng Jui, is that maintaining GDP growth at certain level for a certain period of time would eventually be filtered down to the underlying domestic economy. And therefore, people would be more optimistic. The sentiments of the economy would turn slightly more positive, I believe, especially going into next year.
Once I'm very positive about private investment cycle in Malaysia. And I see this as a new cycle, and I think the business will have to grab this opportunity. And I look at the numbers first half of the year, private investment has been very strong, 10.1%. And that also has spilled over into the construction side. Growth was double-digit strong, and I believe next year will be even stronger. So I also read an article by Manu about the upturn in the private investment, which I think the catalysts are there already. So I hope the government can execute well. And with all these strategic plans and investment, private investment will be very strong and supported by public investment. For those who really, you're going to keep track of the what called the projects and investment, approval investment, actual numbers, they are coming already, they're coming. I hope that will give us another big push for a second takeoff for Malaysia. Now, Anuj, listening to global and Malaysia, I think I'd like to get your view about this, how corporates and institutions in emerging market better managing their financial risk with all this backdrop of geopolitical tension, conflicts in the trade side, and what can your agency, play in terms of helping them to manage this financial risk?
Yeah, thank you for the question, and thank you, Ram, for giving us the chance to be here. So I think I'll go directly into what you said, and I'm not an economist, as esteemed as all of you, but I can just say one thing, that as an institution, CGIF is active in the ASEAN region, and we are lucky to be so, because when you talk about geopolitical tensions and how this region is, we are reasonably insulated with this region, in this region, as compared to what's happening globally. I'm sure there'll be spillovers of inflation coming because of supply chain issues and all. But then if you look at the way IMF is forecasting, or even ADB is forecasting, ASEAN as a region is expected to grow very strongly over the next 4 or 5 years. And after India, it's the second largest. So if you compare India and ASEAN, it's about the same size as an economy, if I put ASEAN as a block. And the growth rates of these two regions are going to be highest in the larger economic blocks in the world. We're talking of Malaysia, but if you see even countries like Philippines, Indonesia, Vietnam, all of them are churning numbers close to 5%. So if you look at the ASEAN 6, all of them are doing very well. And one fact which needs to be seen, and this is something which has happened after a very long time in history, where the base interest rates in each of these economies are lower, except for I think Philippines, which is where the benchmark would be around 5.7, and Indonesia around the same rate. But all the other large economies in ASEAN, your base interest rates are lower than where they were, as compared to dollars. So that's a very critical factor. The other factor which is very important is whenever we've had these kind of supply chain or geopolitical tensions, this is the first time ever in history where we've seen the inherent strength of the balance sheets of the banks and the financial institutions being very high. You see the Malaysian banks, you see the Indonesian banks, Filipino banks, even Vietnamese banks, they are extremely solid. And they are there to support the expansion of the economy in a very positive manner. So the reliance or the need of capital in for the ASEAN region from overseas has come down tremendously. And we see that happening. COVID was kind of a catalyst which led to rates going up. And I think a lot of corporates in the region which were working on, even the banks, even the multinational banks were working with the assumptions that if you need long-term monies and if you need growth capital, you need to access the overseas capital markets. No longer. I think that's gone, especially for the ASEAN 6. The domestic strength of the capital markets has gone up tremendously. We just heard the minister say that the size of the Malaysian capital markets is 2.1 trillion. We are not happy to be so small here, but we have aspirations to become bigger. But I think this transcends across all countries in Southeast Asia. Even a small country like Cambodia is making significant steps to ensure that their capital market become more robust. And I think this is now driving into the philosophies of all the treasuries, all the CFOs in the region, where they are looking not as much overseas, but within their own countries. The other initiative which is going on, and I think ASEAN is doing a much better job than other blocs in the world, where they have institutions like us created, and they have things like the Asian Bond Market Initiative, where there is genuine effort being done towards integration of the entire capital market ecosystem. So you have the banks which are strong, you have each capital market which is emerging to be stronger. So if you ask me, I'm an optimist from that point of view. I think there will be a certain amount of insulation and from the geopolitical tensions, not completely. I'm not a believer that if oil prices go up, nothing will happen here. That will impact us. Or if the shipping lines get disrupted in the Red Sea, it will have an impact on ASEAN. But in general, it will not be as bad. Plus, we talk about China and all that. But again, this region is not having any conflict of that sort with China. The only worry I think this region probably has with China is if it becomes difficult for them to export to China, then or to the Western world, then their oversupply can impact manufacturing in this region. So that's something we'll all have to be careful about.
Hello. It's okay, our technology is still good. I think it's happy to know that ASEAN financial institutions are solid, strong balance sheet. I think if ever there is a downturn, I think they can mitigate and buffer with that. And then what are the key sectors you think you're seeing opportunity for financing?
So ASEAN is, except for Malaysia, I would say
Uh-huh.
Malaysia and to some extent Singapore is very developed, so I won't talk about it. But except for Malaysia, the rest of ASEAN is severely underinvested when it comes to infrastructure. Malaysia is up there.
Okay.
So Malaysia doesn't need that, but Malaysia is seeing a strong push of new technology ventures coming in, like data centers and a lot of new technology things. Like it's one of the biggest manufacturers of hardware in the region. That will continue. But if you look at the other parts of ASEAN, there is a lot of push towards infrastructure there, and because of the nature of an organization we are very close to the ministries of finance of all the countries, and we talk to them. They come to us with their ambitions. There is a strong ambition for transition to climate towards climate, a positive transition towards climate. So I think these two will see a lot of investments coming up. Basic infrastructure, like we are based in Philippines, and we know that a city like Manila is screaming for infrastructure. And we see that that's happening. If you go around the region, Jakarta, what it was 7-8 years back is not the same. It's improved a lot in terms of the new lines coming in, new infrastructure, and that's happening all across Indonesia. If you go to Vietnam, same trend is there. This will only be accelerated. And the beauty of all this is a lot of this is not being funded by, say, Western capital. It's been funded by Asian capital or local capital. Asian capital means either China, Japan, or Korea are going in there, and it's all local institutions. So as the economies have grown, so if you look at Malaysia, you are a middle income country moving towards a high income country. But through the process, you've created institutions which are very liquid, who are investing the monies of Malaysians into the economy back again. Now, that trend we are seeing happening across the region in ASEAN. So the reliance on capital from the West has gone down substantially. In fact, we have seen multilateral institutions finding it difficult to do projects in certain areas. So that's a very strong trend we are seeing emerging.
Okay, thank you, Anuj. I think, Manu, I want to tap your knowledge, expertise about China. Just how you mentioned that I think China recently had acknowledged a problem. So they roll out big stimulus, cutting interest rate, pumping liquidity, exchange of asset with the banks to buy their own share. Two things: prop up the economy, prop up the stock market, the property market. So they are doing something what the West used to do, the property market. So do you think it can work this time around? Will that be a structural problem that they have to really do more than that? Yeah.
No, Heng Jui, you're right. China faces both cyclical as well as structural problems. I think what has happened is that the leadership has now recognized that the cyclical threats are more serious than they initially thought, and they need to do more aggressive stuff to tackle that. And I think it's quite clear they're going to keep rolling out even more measures, right? The housing minister is going to come out soon. And my suspicion is that they will do enough to put a floor to growth. They will prevent the downward spiral from deflation and so on that was a threat. But in terms of actually boosting the economy, I think they seem to be very hesitant about boosting domestic demand. The leadership is very skeptical of so-called Western types of helicopter money and that kind of thing. So there's still a lot of hesitation. The structural problems are very deep. So I think the cyclical problems, can be overcome. You can get 4-point-something%, maybe 5% growth this year, next year. That's okay. It's not bad, right? But they face immense problems in terms of demographics. They ran the economy at too high a rate of utilization for more than 20 years with an investment rate that was unprecedented in human history. And the result is that they overbuilt and they borrowed growth from the future. Having borrowed growth from the future, it's payback time now. Future growth has to slow. And the policies, well-intentioned or not, have resulted in a deep malaise in the private sector. A lot of private firms and entrepreneurs are very concerned that if they engage in wealth preservation, if they take the risks of new technology, of investing in new capacity, and they create wealth, will that wealth be preserved or will it be at risk from some change in government policy? And I think that is something that the leadership has yet to fully address. So these are, I think, fundamental problems, which is why a lot of people are talking about peak China, that China will never be able to again match the level, the pace of growth and excitement that it generated at one point.
Looking from China, if I want to relate to US, do you think US will go for a technical recession next year? Or what's the plan?
So far, like I said, the US economy has been just extraordinarily resilient. Yeah. I think next year there will be some lagged effect of high interest rates. Because of financial innovation and so on, companies were able to defer the point at which high interest rates actually hurt them. I think next year that hurt will begin to be felt to some extent. So there will be some slowdown next year. Right now, I think they're looking at third quarter growth at 3-point-something%, which is extraordinarily high. But next year, I see growth in line with their potential, which is roughly around 1.8 to 2%, which is not bad. Yeah, I don't think there'll be a recession unless there's some big financial shock that we have not seen, or the geopolitical issues in the Middle East turn out to be far more disruptive than we imagined.
Now, I want to pose these questions to Ellen. Ellen, I think just now you talk about economy is doing good, things are good. So what do you think, your assessment of the government, do you think what else they can do further? Have they done good enough in terms of the fiscal reform and institutional reform?
Thanks for the question. Before that, I thought maybe I'll just chip in on China, partly because I mentioned that, looking at my growth forecast, I was looking at the IMF GDP projection of about 3.2% this year, 3.3% next year, on the back of a steady China economy. We think that China has that stimulus power from a monetary policy as well as the fiscal policy to sustain GDP growth near the 5% mark. So therefore, the expectation that China economy may slow down is also partly attributed to the property sector. And recently we hear PBOC together with China authority has come up with certain measures that will continue to help sustain or even recover the property sector in China. But more importantly, I think it's the migration of young graduates, students from the rural area to the urban area looking for work. So therefore, China government, from my perspective, is that need to sustain the economy so that the young graduates, they are able to find work, because we are already seeing youth unemployment in China, rising, and therefore China has that flexibility in terms of fiscal stimulus as well as monetary policy stimulus to sustain China growth. So therefore, that should not derail Malaysia's GDP forecast from that perspective of China's slowdown. To answer your question, I think if we were to look at ringgit performance, I want to go into ringgit performance. It is a sign of positive sentiment on the country, because here, beginning of the year, or even last year, when we look at ringgit against the dollar, we were worst performing currency against the US dollar. But looking at this year, up to now, ringgit has outperformed and remains the top performing ASEAN currencies against the dollar. I think Mano has articulated very well on US interest rates, and therefore the narrowing of interest differential between local rates and US rate helps in terms of the ringgit performance. But more importantly, I think to address Heng Jui's question directly is that when we look at the government's fiscal consolidation program, fiscal deficit consolidation program, they are quite serious in terms of fiscal discipline, like what YB Rafizi guided earlier. And we know that the Fiscal Responsibility Act is one of the areas that the government has put a lot of focus to ensure that comes 2025, we will continue to see improvement in our fiscal deficit. And therefore, what I'm saying here is that part of the reason why we are seeing this ringgit appreciation has to do with some of the measures that has been undertaken by the government since early this year up to now. And that, I think, bring about that confidence in the country. And therefore, we believe strongly that going into this year and also next year, the sentiment, the positive sentiment will be reflected in the economy as well as the ringgit. And therefore, investment, especially from the multinational corporations, would likely continue their realization of the investments.
Thank you, Alan. Since you mentioned about ringgit, there's one question question from the floor, asking about how do you see ringgit level next year compared to this year, and what other sector will benefit from a strong ringgit?
Okay, yeah, I'll try to address this. We talk about the reason for ringgit appreciation, and partly attributed to the interest differential between local rates and US interest rates. If today, and if I were to raise this question, do you expect the US Feds to continue to cut interest rate in the November FOMC meeting, the December FOMC meeting, and continue to cut the US Fed funds rate by another 100 basis points next year, bringing the Fed funds rate down from 5.25 to a region of 4%? If your answer is yes, because like Mano said, to avoid a technical recession, to prevent a US economy from a hard landing, then the interest differential between local rates, local interest rate, and US rate would narrow significantly. And we know Bank Negara Malaysia is quite comfortable holding OPR at 3%. because they have a dual mandate of ensuring economic growth and inflation. And right now, we believe that the focus is still very much on economic growth as inflation remains manageable. And therefore, Bank Negara would want to keep monetary policy accommodative. So therefore, with that in view, we think that ringgit has room to continue to appreciate. We are looking at somewhere in the region of 420 against the US dollar by end of this year.
End of this year.
Yeah, and we are looking at 410 by 410 by end of 2025. And the reason why is because it has to do with the announcement tomorrow, the budget. And earlier, I think YB Rafizi also mentioned about sovereign rating agencies, Moody's, S&P, and Fitch maintaining stable outlook. If the government gets the measure rights in the coming budget with continued fiscal discipline, fiscal consolidation measures, my thinking is what would stop sovereign rating agencies from upgrading Malaysia's stable outlook to positive. And that, I think, would be another catalyst for Malaysian ringgit going into next year.
Well, what would be the fair value of ringgit?
Okay. Yes. Obviously, as economists, sometimes we try to avoid answering this question.
Today, as a moderator, I can ask you.
but nevertheless, what we tend to do is we look at real effective exchange rate of ringgit, and we draw a long, moving average, and then try to determine where are the fair value of ringgit. I would say, most probably in the region of maybe from the.
You can quote no press, right?
Yeah, 390. Yeah, it's in the region of about maybe 390 to 410.
390. So what are the sectors? Because some of the business people also ask me, hey, ringgit strengthened too fast. We cannot cope. Maybe should we go and talk to Bank Negara? When ringgit down, nobody, it's just quiet. The exporter happy, go to the bank. And now when the ringgit strengthening, they rush to convert. And some, we look at their hedging, forward position. And we look at the foreign currency deposit in the banking system. In the month of August, the foreign currency deposit dropped by 11 billion. Those individual corporates start to convert to ringgit. So with your outlook for ringgit likely to be stronger, I think that also reflects of the confidence, investor confidence, domestic investor confidence of Malaysia. We are seeing good time coming for Malaysia. So I think what are the sector likely to be impacted, which I think ringgit currency cannot be just a sole factor for you to boost your competitiveness, right? You have to look into other aspects. So I think as you are in the bank and also in the broking industry, I'm sure they will be talking about sector will be impacted and versus sector will be benefit. What are the?
I just want to relate the recent move by Singapore's Monetary Authority of Singapore, where they manage their monetary policy through what we call the nominal effective exchange rate, NEER. And even though Monetary Authority of Singapore guided that Singapore's exports were dampened last year, partly due to slower global demand, but based on certain survey, it also mentioned that the strong dollar has eroded some export competitiveness. So what I'm trying to relate here is that obviously from a regional perspective, whenever we see a currency appreciate too strongly in a short period of time, there would be some effect on export competitiveness. And some of those export-oriented industry may be affected on that. But having said that, if you look at the structure of the Malaysian economy, we export a lot of the electronics and also commodities related products, petroleum related products, but we also import a lot of intermediate goods. 60% of our total imports are intermediate goods. So with a stronger ringgit, the importation of goods may become slightly attractive, cheaper, and therefore offset part of the export competitiveness that we are losing due to the strong, slightly strong ringgit.
Yeah, Alan, just now you mentioned a budget. Maybe there's a question from the floor also quite highly voted. In terms of, do you think the budget will announce, reintroduce the GST and also announce the starting of the RON 95 subsidy rationalization? Or maybe I frame it in this way, within the two, which one they should do?
Okay. Yeah, since this is a popular question, I'll try my best to answer. In last year's budget announcement, we saw an article, a short article from Ministry of Finance, looking at some of the advantages of reintroducing GST as a replacement for the current SST. So my personal view here is that highly unlikely that GST will be announced tomorrow. Yeah, that is my personal guess. But however, as we all know, this is from an economic textbook, maybe taking from IMF, where they always guided that GST is a more effective tax system. It's a consumption-based tax on consumer, not on business, and therefore, when governments is able to generate certain amount of revenue, they can also, from an indirect taxation, they can also look at reducing corporate income tax rate to make the industry more competitive. That is the thinking behind from some of the literature that I've been reading. But having said that, I think when we look at the current SST with the recent increase in the rate to 8%, I think government is quite comfortable at the moment with the current SST system. So highly unlikely that there will be any announcement tomorrow regarding GST. That's my perspective. And the other question on RON 95, I've also, personal view is that it will not follow the diesel removal subsidy mechanism, but rather I think maybe we will see RON 95 prices being adjusted gradually from the current 2.05, maybe just by 20 cents to 2.25. That I think would allow the government to, maybe reduce the subsidy bill, but at the same time, manage the impact on inflationary pressure in the country.
Okay, this question that I'm going to ask will relate for Manu and Anuj, which I think is important for us to address today. Is about the global debt, US debt, and the dollar. I think since the day one when I joined the industry, every time I go marketing, investor will ask me when the dollar will crash. Until today, dollar still looking strong. Yeah, we know the dollar reserve share of global reserve has been coming down from a peak to 51, I think about 50% now. I think renminbi share rising, but not that high yet. So I like to ask Manu how you look at this dollar issue, dollar, global debt, US debt, and that is the potential risk to the global financial market. Yeah.
I think both candidates for the presidency are fiscally irresponsible. But according to the projections, Ms. Harris' plans will add $3.5 trillion to the debt over 10 years, but Mr. Trump's will add 7.5 trillion, so much, much more. So whoever becomes president will have a major fiscal issue on hand, because I don't think the markets will tolerate that. So I think the focus of markets, which has been very lenient towards the dollar and its fundamentals, I have a suspicion that the US twin deficits, budget and current account, will become more highlighted by financial markets, and that would put pressure on the US dollar. So I think the dollar moves in a range in their cycles, and I think we've gone through a period of extraordinary dollar strength, which I think cannot be sustained. So there will be some natural cyclical correction. But structurally, those who think that we are in for de-dollarization, that the dollar is going to be replaced, forget it. There is no alternative to the dollar, particularly as a store of value. There is no other currency in which large savers can place their savings. Even Mr. Putin tried so hard to diversify from dollar, but still had several $100 billion that could be confiscated, right? China has been trying for years. They still have something shy of 2 trillion still in US dollars. The reality is that if you're a big saver, oil exporters, China, Germany, Singapore, Japan, and so on, you have no choice. You have to be in dollar. There is no alternative for the next 1 or 2 decades, I think.
Okay, so we are safe to have some more diversification of currency in our asset. Yeah. So I think I know it's more related to ASEAN members. I think you know our Prime Minister has been making a call to ask most ASEAN countries to look into encourage more their settlements of trades, financial in their own currency. Yeah, try to reduce dependency on dollar, which I think Manu talking about. I think it's hard to replace the US dollar. There will be a long way to go. So do you see member country in terms of when you look at the financial operation side, whether you are seeing a very shift into the payment using their own currency or even like renminbi? In the case of Malaysia, I think currently our trade with the China, 25% is being settled in renminbi, vice versa. So what do you think can do further to enhance this trade currency settlement? Yeah.
Yeah, so there is a lot of work going on integration of the ASEAN markets. And I think and I'm not going to talk like an economist, but like a common layman on the street. If you're from Singapore, you can use your QR code to make a payment if you have a bank account in DBS, you can come to Malaysia and make a payment using a QR code without actually doing a conversion. Now, same kind of linkages are being brought around all the ASEAN countries. To say that the governments are actually very consciously working with the central banks towards integration of the payment systems. That is helping individuals as of now. But I think going forward, this will also start helping SMEs and MSMEs. And that leads to the need for conversion, need for having foreign currency going away. So that automatically gets systems in place where it's very easy to settle cross-border payments. And then the need to go into dollar and then change back to ringgit if you're from, say, Thailand is not there. You can just come from Thailand, use your own payment system to do it. So you see there are 5 countries in ASEAN who've actually signed up on it and all others are coming on board. They're doing that with India, they're doing that with China. So all these processes are going on. To say that de-dollarization is happening, yeah, I think to some extent it is. It is being amplified by the geopolitical tensions. There are a lot of settlement mechanisms in discussion, but I agree with Manu. At least in my lifetime, I don't see that happening it could happen probably going forward. But the one theme which I think the governments can do more and should do more is opening up of their capital markets for others to come in. Now, take Malaysia, and I might not be very popular for saying so, though I'm there in the system, is that Malaysia in 2007-8 was probably one of the most open markets for overseas issuers to come and issue bonds or access the capital markets. Today, it's not. Thailand was till last year, but for some reason, they've tightened the norms and they have made it difficult for foreign issuers to come and issue. The other capital markets are not open at all. So we have some guidelines in, say, Philippines. We have some guidelines in, there are no guidelines in Indonesia, but all markets are very insular. And I can understand them being insular when you have liquidity issues in the system. But today, all these countries, be it Malaysia, Thailand, Indonesia, Philippines, they have immense local currency liquidity. So I think the next step would be for them to open up their system so that they can be true integration of the capital markets also, where it becomes easy. So if a company in, say, Malaysia wants to go and do something in Thailand, they should have access to the financing or from the banks or the capital markets. For the same reason, an Indonesian company wants to go to Philippines, they should find it easy to access. So those kind of linkages still need to be done. There are initiatives in place, but then it's very difficult to get all the institutions on board, and hopefully it will happen over a period of time. But when it comes to on-the-ground payments, I think ASEAN is ahead of the other parts of the world, even ahead of the, say, Europe or the West, because there are more linkages being developed when it comes to a common man going on the street and making payments without doing the actual conversions.
Okay, thank you. So I think it's fair for us to pick some questions from the pigeonhole. And there are a lot of questions asking about impact of interest rate decline affecting Malaysia, which I think Malaysia Central Bank, I answer on behalf of the panelists. I think Malaysia conduct of the monetary policy should be independent of what happened in the foreign interest direction. And of course, we will have to consider the external development, but priority is still looking into domestic side. I think my take is that the OPR likely to maintain unchanged at 3%, at least up to first half of next year. And unless they are threat to the growth outlook, I think given that differential gap view between US and Malaysia will likely to narrow, that financial flow side, you may see flows of money come in, whether in the bond market, equity market, but recently we also saw some hot money flow. So that explains that it can reverse and your ringgit may be still under some pressure. So it's important for us to continue to ensure the fundamental flows of capital into the country, the FDI flows, and also the domestic investment flow must continue to retain in the country. That is key to determine whether ringgit will continue to strengthen, perform steadily over the next 4 months. I think the other question, which I think maybe Manu, you'd like to take on, is how Malaysia and ASEAN strategically position themselves amid the growing influence of the two global economic, in terms of the geopolitical dynamics. Yeah, and then maybe you also may add on, what do you think Malaysia can do being the chair of ASEAN next year? Thank you.
Thank you. I think the question about neutrality, I think there's no choice. It does not make sense for smaller powers like Malaysia or the other ASEAN countries to take sides. And if ever it comes to a point where one of the big powers tries to force a country to take sides, then that country should be very hard and refuse, even if it means paying a price in the near term, because to give in will mean paying a higher price over the longer term. So we have to play this game very carefully, but there's absolutely no conditions under which I would say it makes sense to take a side. We have to be neutral. On Malaysia's role, I think in the past, Malaysia has actually played a very constructive role as ASEAN chair and brought about change. The vital need in the next few years for small, highly open economies like those in ASEAN is to seek protection from protectionism, because we're going to see a lot of protectionism. So we need to be protected from that. How do you do that? You have to promote regional integration. And I think Prime Minister Datuk Seri Anwar has talked about this in the past few days when he was asked about Malaysia's priorities. He actually mentioned that, and I think that's exactly the way to go. What exactly you can do to promote integration? I think the ADB actually has been doing quite a lot of work, and I think what Anuj said is one area where we can actually practically move forward on. We have the CMIE, Chiang Mai initiative, which has been expanded, and I think that they have done quite well, and we can build on that to seek more protection against, capital market volatility and all that by strengthening those arrangements as well.
So I think Malaysia as a chair for next year, the priority will be what are the...
To promote integration, to promote greater cooperation among ASEAN countries. There's of course things like Myanmar, but I think those are very difficult to resolve.
Yeah, I believe the Prime Minister will introduce the principle of the Madani framework, inclusiveness. Yeah, that could be one area. I think they have been working very hard, and there'll be a lot of events. I think I would urge this is next year. There'll be a lot of events hosted by Malaysia as a chair, and they'll be going around the different states to host the meetings, ministerial level meeting, working official meeting. And I think that will also help to boost up the services sector, tourism activity, one of the sectors which can contribute to growth for next year. So I think we have 5 minutes to go. Let me close the panel discussion. Before I close, I give you each of you maybe 3 seconds, keywords more related to Malaysia. I know you can abstain from if you. I'm sure you can also advise Malaysia. Okay, that question is one thing that you would want Malaysia government to do. What is the thing?
I think more than Malaysia government, I'd like
Okay.
to state what we want to do for Malaysia, because I think
Malaysia government,
I really
Manu
don't
also.
want to talk about government over here, because they are stakeholders in CGIF. So I think we want more innovation to come about in the market.
Okay.
We really want to see if we can help companies grow in the new technology sector. We want to see if we can innovate with capital market tools to help SMEs and MSMEs in the Malaysian economy. And this is our ambition for 2025. If we can actually have discussions with either rating agencies or banks or any institution which can help us in that, we'd be very grateful, because we think these two sectors are key for Malaysia's growth going forward.
Manu? Or
difficult
one
for
thing that you want government to improve.
Yeah, it's very, very difficult for foreigners to tell.
It's okay, it's okay. We are
But
very,
since we are
open-minded.
friends, that's the reason why virtually every country in the world, except the US, has a GST, right? It's a very good tax.
Okay.
And I think, I know politically it's not easy, but I think what outsiders are looking for is the political ability to bring GST back in some form. I think that would be very positively taken.
Okay, I will convey your message to the Prime Minister. Alan?
Okay, 3 seconds. Diversify the export market and also boost export competitiveness. That would be something that I look forward to.
Okay, thank you. I think mine is good execution. Yeah, good execution is important. I think coordination, like your GST more tax reform, and help to boost up our export capacity and talk about integration. Okay, I'd like to conclude this panel discussion. I just want to summarize the key things. I think there are major risks threatening to the global economy, and the risks are altogether, they are mutually reinforcing each other. Yeah, we're talking about rising heat of the geopolitical tension, trade fragmentation, US-China economy, we have to watch out. Could be financial distress, renewed inflation pressure, and climate-related disaster. But near term, watch out for the outcome between the Beauty and the Beast, and whether that will impact not just the US economy, but the global financial market and trade. And for Malaysia side, just to write on what Alan said, I think the competition for investment is heating up. I think Malaysia must continue to improve the investment climate, make it ready for investor, friendly. The one-stop center must be effective. It's not a full-stop center. And also try to further liberalize the regulatory, make it simpler, like in the case of SZZ, right? I think the QR code. So I'm happy to note, I think Ram told that the Manu from Singapore crossover is about 45 minutes, right? And this morning, we also talked to our friends from SP Global Rating from Singapore. Today is also about 45 minutes. So maybe there's less traffic, but I hope that that could shorten further, and that will make the people movement, capital, trade flows between Singapore and Johor. Now, I think it's important that we take note from today. Hope that helped you for the starting of this forum. And with that, I'd like to invite each of you to say big thank you to our esteemed panelists and give them a big round of applause. And I think they are sharing really enlightening us and very inspiring. And I hope that next year we will have them again, except me. Moderator is very difficult. So thank you very much. Bye-bye.
Right, thank you very much once again to our esteemed panelists and Heng Gui for moderating the president. But first of all, gentlemen, I would like our fine gentlemen to just stand at the edge of the stage for photo opportunities. All right, of course, we have our panelists led by Mr. Lee Heng Gui, Mr. Anush Avasti, Mr. Manu Bashkaran, and Mr. Alan Tan. All right, gentlemen, if we can move forward a bit, just to the edge for photo opportunity, that would be fine. Right. And of course, ladies and gentlemen, let's give our fine gentlemen a big round of applause once again for their very insightful discussion and revelation.